Corey Johnson, Epistrophe Capital Research Chief Market Strategist and host of the Drill Down podcast. Corey, I know that you follow Intel very closely as well. I mean, what do you think Intel needed to do this quarter, and did it do it?
Yeah, I mean, it continued to make a mess. I mean, the stock's down 54% in the last year for reasons. So the fact that it's kind of flat in after hours here, this is not a good print. It's not a surprise, but it's not a good print. And across the board, there's little things that are maybe a little bit better than they were. Foundry business a little bit up sequentially, but they didn't invest billions in the foundry business to have it to be up a little bit sequentially into a fourth quarter. And to Mark's point, I mean, this company is not what it used to be, and it is not revered by the startups and by the companies that are doing cutting edge things in Silicon Valley, and yet it's struggling to do the things that it used to do. The data center business is, it was still fine, I guess, kind of flat again, quarter over quarter, but this is, it's a growth stock, it's a test stock, this is a time for technology, it's a time for semiconductors, and Intel is, maybe things are really bottoming out here, but I think to Mark's point, a new CEO is going to have an exciting strategy here for what to do with this business. Spinning off the foundries, it'd be nice to spin off the foundries when they're doing really well. So, so Intel can really collect on that business, and they're just not there yet.
Well, and I'm seeing a headline here that they say the external foundry wafer revenue won't be meaningful until 2027 at the earliest. So, kind of speaking to your point there.
I think that one of the things we don't give enough credit to Taiwan Semiconductor, give them enough credit for, is how well they do what they do. That, yes, they've got fantastic chip-making equipment from ASML, but they're able to have really fantastic yields and to use that equipment so very well. And Intel trying to do the same with similar equipment isn't able to get that up and running yet. And this is not the fantastic Intel manufacturing capacity that we used to see from this company when it was the greatest manufacturer in the world, although they were only making Intel chips. It looks like they're not having that success with their Intel chips or with anybody else's chips either.
Yeah, I mean, Corey's right. I think the real...
I love it when he says that.
I've known you long enough to know that you're often right. But I think... listen, it's really hard for tech companies to reinvent themselves. Let's think back to some of the great tech companies. I can name a few. One we're about to hear from is Apple. Apple was trading for cash in 2002, okay? Microsoft, the Wintel monopoly, I'll even date myself even more. Microsoft, the stock was flat from basically the late 90s to the early 2010s. It did nothing. Then Jeff Ubben took a 1% position for Value Act. He was the biggest active investor in the company, and we know what's happened the last decade. IBM, a company we'd never talk about, has sort of reinvented himself a little bit, but it happens very rarely.
Sorta, yeah.
Sort of reinvented
Well,
itself.
I mean, the
Right.
stock was up 12% today or something
Exactly.
in earnings.
Yeah.
Well,
And
guys,
so that's my point. It's hard to reinvent yourself.
Okay, so let me ask you both. Let me put this question to both of you then, which is, what would Intel what would that reinvention even look like? Or is that not something that we even can conceive? You would need that sort of visionary leader to come in there and come up with it. Corey, I'll put that to you first, and then Mark can chime in.
I mean, there are some technological things that they just can't do yet. And so, yeah, it'd be great if they could make an NVIDIA chip. Well, no one can. Maybe AMD on the margin. It'd be great if they can get an 18 nanometer or 18-aught production up and running and be able to lead that and do that with great high yields and great efficacy and do it in the US. That would be a wonderful thing for a leader to decide that they should do. Pat Gelsinger has already decided that. The question is, can they do it? And so far, the answer's been no. This could be a good time for a new CEO to come into Intel because the expectations are so low, the performance has been so bad that up's one of the two directions they're likely to go, but flat's probably not it.
And I'd agree. I mean, they have to be in the high growth markets. You see that in the data center market. You see that in AI. You see that in automotive and other of the fastest growing parts of the economy. They're going to have to be relentless and figure out where that is and be part of that high growth, high intensity market. And like Corey just said, they have shown no signs of it. This is not a new epiphany that this company is falling behind. It's been going on slowly, like a lot of things in life. It happens slowly and it happens quickly, and it's been happening for a long time.
So it sounds like neither of you guys would step in front of this, right? Would try to buy into this. Is it just NVIDIA's game here? I mean, Corey, I know you've talked to us about other opportunities to look at in the chip universe.
there's a lot going on out there. First of all, I got to say that having been around Silicon Valley for so long, there's a lot of love for Intel. It had a really unique culture. There's so many great people who've worked there. They've had the best technologists over the longest term in semiconductors of any company ever. And so you've got to think there might be something in there to plumb right now. But I think that, they chose not to be very active in the mobile market, and that was a mistake. They got into the data center market late, but did quite well in that business. And that's still a business at a lower end that they can operate in. But it's a very different kind of business. But yes, there are so many other companies that are doing so many other interesting things and having much greater success. I think it's also surprised. I am certainly surprised, again, having covered this for a very long time, how fast things changed. It really seemed like it was Intel's game for at least a decade ahead, because that's how far out they were planning. That's how far out they've got to decide, make technological decisions about what their data centers should, or what their fabs should look like, what kind of equipment they should be using, what the right sizes of equipment are going to be, and dies are going to be, and what lithography technology is going to work. Those decisions are made so many years out. It's amazing that they got leapfrogged, but it also means it's going to be so much harder for them to turn this around. And yeah, this is going to be a real tough one for Intel.
Yeah, again, the irony, of course, is that Moore's Law is hitting them. The creator of Moore's Law is hitting them. What I'd also say is it's not that big of a company anymore. I mean, it's a big company, but it's not that big of a company anymore. The question would be, if private equity or somebody looked at this and said, there's a corpus of this company where we have an amount of sales, an amount of revenue that we know we can guarantee sort of for that time while we really innovate, that would, to me, it's almost burdensome to be a public company right now for them. And I'm not saying that's going to happen imminently or anything's in the offing, but it's almost
without the
burdensome.
fabs, and with a little cash from Mobileye maybe, because Mobileye seems to be improving things a little bit, and that might be getting more valuable. Maybe that gets them to a different place.
All right, we got to leave it there, you guys. I could do this all day, and maybe even in studio with both of you at some point.
Someday.
Wouldn't that be a dream?
We'll all be together.
Corey, Mark, thank you so much. I appreciate it.
Great to see you guys.
You too.